Hello, hello, hello. Welcome, welcome. You know, this is my favorite part of the night. Just to end it off with you guys, I would do a live, but I'm on a Wi-Fi box, so it'll be distorted. Boy, do I got some great news for you guys. I compiled some data, really great information that you guys are going to love, okay? Now, in this video, we're going to be talking about a possible market bottom on March 8th. But before I do that, I know I've been bothering you guys about this, but today's the last day. I have to. Today's the last day to get your 5 free stocks if you deposit at least a penny. By using the link down below, you guys will be able to get up to $9,600, almost $10,000, guys, okay? This is going to be expiring today, March 31st, at the time of filming this video. And we went ahead and just kindly extended it to the end of the month. So please take advantage. They usually give out 2 free stocks. That other 3, it's free money. With inflation going on, it could pay up at the pump. Heck, it can even pay for free gas for about a couple years from now. So, yeah. So hopefully this is, they bring this back. But as of now, this is their March promotion. All right, guys. So let's get back to here. And we're going to, at the end of the video, talk about some support and resistance lines for Clover. And we'll finish. So this is an important video here because there's going to be a lot of data discussed. Okay, so first off, I want to point out and talk about how we may hit actually, let me go ahead and switch to a laser here, right? So you guys can see here. So I believe that we may have hit a bottom in March 8th for the year. We could hit future bottoms for the future. God knows, right? But for the time being, we may have hit the bottom. Okay? Investors now are going to be turning into stocks as an inflation hedge. And for people that have been in the market for, within these last 2 years, you remember that time when people were like, you know what, I'm just going to go to stocks. The Federal Reserve is just printing money, and we're just essentially going to be losing money if we put stuff in the bank. Well, I think we're going to get to that level of mentality. So you're going to start seeing stocks travel up to insane evaluations. We are going to have a bull run, okay? So, and I'm going to explain to you the thesis right now and give you the data so you know how to essentially think for yourself instead of just basically consume. What I want to do is make you guys become the thinkers and be able to extrapolate data and know why things are happening instead of reacting to the market, anticipating the market reaction, and having a plan to execute, okay? So I assume, that's my coffee if you hear the beeps, right? I assume that all of our price targets that we've sent out on our Discord channel, a lot of them are going to start hitting. If not, they've already have been hitting. Meme stocks are on the rise again. Apes are pretty much back in the business, right? Which is good because then people like us who actually know the intrinsic value of stocks, we know when to get out. All right. So big money is projecting that the S&P 500 upside potential for next year will be $5,000 to $6,000. That's good. That's extremely good considering where it's at right now and where it was at when it dipped down below. So I just want to switch this now to pen mode, and I want to talk about March 8th, right? March 8th was this location right here, and it was trading at around almost $4,200 in this area. And from March 8th to March 30th, which is, the market hasn't opened yet at the time of this recording. So March 31st, we're going to be seeing the market open soon. We've seen a close to it, even higher, an 11% increase from this low. And the projections are that we may see as highs of 5,000 or even 6,000, and the stock may, the S&P 500 may hit this, and then we'll continue our analysis. So this is the current projections, and we're going to be explaining why and all that great stuff, and to give you guys data that unfortunately retail just doesn't have access to. All right, So now that we went through this, I want to just point out just one more cycle here. This grayish line here signifies a correction decline of 10% or more, but definitely less than 20%, which is what we experience here. And as you can see, we've had these hiccups, multiple times within the life cycle since 2010-ish here. So these are normal fluctuations. So when people are new in the market, they sold out of fear, fun. This just, unfortunately, if you had the data, you would know that, this is possibly just another cycle, right? So let's continue on. And again, we talked about how it was 11%, and this rise from this direction was the 11% that we mentioned in the previous two slides, okay? And again, I'm building up. I want you to kind of like frame what we're going to be talking about, because there's something called the S&P 500 index versus bull-bear ratio. And every time we hit 1 or less than 1, we get essentially a buy signal. And we've been getting these signals, and they've been really great predictors of the market by the Investors Intelligence Group. And I have to share this with the community, because every time we've gotten below 1 or around 1, we've gotten these, we'll keep it red. We've gotten these buy signals, B, right? This was, let me remove myself here. This was during the 2020 coronavirus pandemic, buy. And then look at that. It rebounded. And look at this right now. We just had a buy. And now we're expecting a possible rebound. If not, it already begun. And here are other ones for the 2018. This is for China. For people that have been around that time, there was a lot of Chinese stocks that were hit hard during the Trump administration. And we have other buy signals here. And you can see these are great predictors. And you can see as we hit that signal, we always rebounded, right? So I just want to provide you guys this data, because this, people are just trading on Robinhood. That's all they have. People are working during the day. They come at night. I want to provide you guys some information to help you guys out with your trading, as this is an educational platform, okay? So now let's zoom in on this specific bottom. Now and that's why I've been quite bullish / bearish on some aspects of the market. However, I've always maintained a constant buy on Clover Health, because it has been oversold. It is undervalued, and a lot of stocks have been at that region, which is why we've been sending out a lot of price targets and just a lot of just complete. I'll be honest with you guys. I'm honestly really shocked of how the stocks got depressed. I mean, I'm shocked of how many people sold out of these great stocks like Clover and PayPal and Meta. I mean, I just, or Facebook, you know what I mean? So it's just, I'm moving, so I'm a bit tired, which is why I have the coffee here. But I have to tell you guys, this is just crazy what we've been experiencing in the market. And who's ever, for all you guys who hold on since, I believe, IPO, IPOF-C, the original SPAC. Oh my God, you guys cheers to you. You guys have some major balls, okay? So definitely, please congratulate yourself, because I do believe we hit a rebound, okay? Because if you look at March 8th, we got the lowest, I'm so tired, lowest ratio, because remember I told you 1 or less means a bull, aka good. That right there is the lowest it got. And actually, it got a little lower. And then all of a sudden, it started rebounding. And that's how we know that this may have been the bottom. There are other indicators as well, but we got that signal here in the gray. And every time we get these, things go back up. Okay, now, mind you, things can go up faster than we anticipated, right? And with how efficient the markets have been recently, you have to be careful. Don't get diseased into FOMO. Remember that, okay? So there's that. So now I want to, again, I'm just moving my pictures all around here. I'm just going to put it here, okay? Because there's a lot of great information here, okay? So this is called the, sentiment AA2 bull ratio, all right? I want to just, this is asking a lot of the non-professional investors the sentiment and how they feel in the stock market. So a lot what Chamath was saying, for people that follow the videos and keep up, right? And just to recap, he said that, if you do opposite of retail, you can make money in the market. Well, this is the bull ratio, which means, and if you don't, people that don't know what ratios is, I'm gonna just do it here. There's a bull, there's a ratio. This means obviously bull is good over most likely bear. The higher this is, obviously the higher this must be, okay? So what this tells me is that we're at low levels here, and it was happening during February, and then also March, which means that since the bull ratio was low, then this number was a lot more lower, indicating why the bull ratio was at near its 30 range. Which means that if you ask someone, a lot of retail, they would say, I'm not buying. No, I'm not buying. The stock's going to zero. The stock's going to zero. I'm done. You know what I mean? You know how retail is. They freak out. And now the switch is flipping. Now we're starting to see an uptick. Mind you, and I'm going to keep track of this. I'm going to let you guys know, right? We're going to continue giving out this information. I'm going to stay with you each and every step of the way. Now, again, if I'm looking at the tablet here, I'm with you guys. It's just, if I'm not looking at the camera, just understand I'm looking at the tablet here, and I'm seeing what you're seeing, okay? I'm going to keep you up to date, because once we strike this line here, and we could get at levels where we could go extremely high. Who knows where, how high we could go. But I'm going to keep you informed, because this is when retail, remember in the beginning of 2021, if you told everyone that Palantir was overvalued, they would literally slaughter you. They would take you out, and they would literally just go weapon fire open on you. Retail goes crazy. Cults become insane. Reddit community will literally torch you, right? And this is because everyone's happy here. But you got to do opposite of what retail does. Here, easy, short the market. Here, calls. Okay? That it's like literally foolproof, right? For me, I'm more conservative. I would say, stop buying here. Just buy stock, dollar cost average, and you're good to go. Okay, so now that we scribbled all over this, I hope we entice the data here, because it seems like, as you can see, we might be headed for a nice rebound. Okay. So now let's look at, a lot of the, this is kind of funny, dumb money, smart money. Again, here's a smart money, and it's in blue, and here's the dumb money, it's in red. Okay, so I'm going to switch colors. Got to remove my fat head here. Pen color, let's do green. It's a nice color that pops out. So, as you can see, when we were down here, oh, it's still in red. Okay, we'll just keep it red. When we were down here, a lot of dumb money wasn't buying. And this was literally in March when the bottom happened. Retail was fighting, buy dip, buy dip, buy dip. And all of a sudden, retail just completely crashed. Dumb money took over, right? So dumb money basically started to sell. And as soon as dumb money started to sell in January, February, and March, smart money in blue here, smart money, started buying insane. They peaked right here, right? Look at that. While dumb money was just being dumb, retail was just literally, I'm going to sell. I'm going to lose money. I'm going to sell because the stock market's going to zero. Institutions and smart money were happy and they were buying, doing opposite of what retail was doing. But now guess what? Retail is like, it's going to squeeze. It's going to squeeze. Let's go to the moon. The stock market's back. Hoorah, right? And now dumb money is starting to buy. But look at this. Smart money, their buys are starting to decrease. We got to watch this. Once this goes ahead and hits this bottom, I'm going to have a different tune. And, you know, I'm afraid that a lot of people on the YouTube are going to be like, this guy's a bear, this guy's a FUD. It is what it is. I don't care what people think. I'm going to supply you the data that I see and use my 10 years of experience. Now it's going to be 11. My birthday is next month, so it's in April. And I'm going to keep supplying you the data as I see fit in terms of what I believe the market's going. And and then we're going to base it off of all these indicators that we have and that we use. All right, so now let's go ahead and drag my picture here. I'm literally flip-flopping my picture. These are panic attacks, okay? And let's just talk about the recent ones. Here we got the North Korean crisis up in 2017. We have inflation fears and wages, trade war talks. We have Powell's hawkish interview that happened. This was in 2018 when he started saying, we're going to taper and start doing those rate hikes and all those things. Not taper. Taper was in 2014. Just remember that. I misspoke. U.S.-China trade escalates war with Donald Trump. Here's the Trump threatens new tariffs. Here's the yield curve inverting. This is a good one. And we'll talk about this. Remember this. August 14, 2019. And then after some odd months, recession. And again, we're just blaming it. We just blamed it on COVID. Okay? Now, then that was COVID right here. Speak of the devil. Then we have the overvaluation correction, election jitters. We had the return of the bonds here, Evergrande energy crisis, the Omicron variant, Powell turns hawkish, taper tantrum, and Ukraine crisis. Now, if you guys want the rest, just like what Ray Dalio was saying, sometimes people don't. It's hard for them to anticipate, like, oh wow, I wasn't expecting the market to crash. It's because it never really happened in their lifetime. That's why I like Ray Dalio's Changing World Order, right? If you can, take your eyes and study the past, you'll be able to definitely predict the future. And a lot of these things intersect, and they all have a common denominator. So if this goes back all the way to 2009, all the way down to the Great Depression here that we had, 2008, and we got all of these panic attacks. So the job here is to say, what could be the future panic attacks? Okay. Well, simply, the Federal Reserve can maintain its hawkish stance. They could do more 50 basis point rate hikes. They go ahead and decrease their balance sheet, right? Balance sheet reduction. And the question is this already priced in? That's the $1 million question. But I'll tell you something. The CPI report on April 12th, which will be for the March CPI report, if that ends up going extremely high and does not cool down, well, my friends, the market could get some jitters, and that could be another panic attack. Okay, just keep that, write this date down. Keep this in mind, okay? So now let's go ahead and let's talk. Let's read this here. High inflation, usually stocks tend to outperform bonds, right? And we talk about this when we once we lift off of beta axis in our Intelligent Investor course. Chapter 2 of the Intelligent Investor, if I recall, talks about how stocks outperform bonds. Okay, and that's because bonds are just bonds. They're just from government. They're just a little slip. That's it. That's what you get. The thing with stocks is that they have pricing power. They can go ahead and are able to increase their revenues, their earnings, their dividends, and outpace inflation here, right? Because the dividends can get reinvested back into the business. And like, for example, Tesla increasing the prices on the car, or Coca-Cola increasing by a couple pennies. These are things that stocks can do to combat inflation. And essentially, they're just passing it on back onto the consumer, which, the middle class gets screwed over. And we're just not going to get into politics, but understanding the numbers, you'll understand the issues that we have, okay? Now, if we have high levels of interest, then the bond market is going to go ahead and win over, okay? So I try to make this very simple, give it to you in a tablet form, and essentially teach you market cycles, and I hope that we could get far together. And if you guys have anything to add, please comment down below. I learned a lot from you. I want this to be a learning community. And so now let's go ahead and talk about the 10-year minus 2-year Treasury constant maturity. Now, unfortunately here, we did have an inversion, okay? Every time, this is a leading indicator, which means that once it inverts, recession. Inverts, recession. Inverts, recession. Inverts, recession. Inverts, recession. Again, and here it is inverting. So the question is, when's the next recession going to happen? Well, if you analyze the data here, and if you look at if I can make myself smaller, there it is. Now my head's a lot smaller. Okay. So if you look at the inversion of the 2-year and 10-year, we can see that we've had dates of these inversions in 1988, 1998, 2005, and 2019. Okay? And since then, we've had a bull market peak on average around 17 to 20 months, we've had a bullish stock market. So as soon as the inversion happened, remember, the inversion happened on August 27, okay, of 2019. Then since February 19, again, you remember the coronavirus, and then everything dropped, we were up 18%. So an inversion may be bullish. Now, from a Cathie Wood's perspective, and I agree, the last time we had inversions, and we can go back in the past that are not bullish, we can find that inversions signify extreme high growth, a time of innovation. So don't disregard Cathie Wood's investing philosophy, as I incorporate it as well, and I look for disruptive technologies that are backed by fundamentals. Now, let's talk about the equity hedging index. Now, people can't find this data. We like to supply it, and it's an honor and privilege to serve you. You guys have no idea. So every time that we get to a peak, think of it as a kind of like max fear, right? And then once we start trickling down, we know buy. Okay? And that was right around here, which is March of 2020, which was when a lot of people started, going in the stock market. How cute of them, right? If you're one of them, welcome to the family. Okay? And it's a privilege to have you. And it's time that retail gets a fair shake on Wall Street, because I'm sick and tired of the poor getting poor. So welcome to the beauty of America. All right. So, however, once we go ahead and hit a bottom here, it was time to start stepping out. And retail can take it as far as it wants, but eventually big money is not going to pour in. And around this time here, institutions went ahead and with their smart money, dumb money ratio, they started to stop buying, and I guess the dip, right? But now we are at an inversion, just like where we're at right now. And this is signaling here a buy. So now we have multiple indicators. We had this particular buy here. And now we have another one for you right there. So understand that, okay? So what that basically tells me is that we are in for a bull market until otherwise noticed, and I'm very bullish on these types of data. Now, are we going to be heading into a recession? Yes, but I do believe that retail is going to go kind of bonkers about this money, and once our stock projections hit our bull or our price targets, we'll definitely hit that sell button, because that's it. Once the intrinsic value passes, then we may go ahead and get out and wait for that recession to come in and restart the whole process over again. Because remember, a recession is coming. These are all bull market peaks before they fall back down, just like what we saw here. And 2007 before the 2008 financial crisis. Again, you guys have the data. Data is power. Knowledge is power. I'm very happy to have you guys watching here. And thank you for supporting this channel. So just a quick thing here. Let's go in and look at our AI. And just quickly, let's talk about good old Clove here. Let's go ahead and do the minute. Oop. Let's do my... Definitely messing up, guys. My apologies here. I'm typing with the keyboard slanted on the side because I have the tablet here. There it is. So let's go ahead and let's do the minute. Let's do the hour, the day, and the week. Let's just get them all out of there. All right. So based off of the minutes, let's get the pen here. So we got a support line here at $3.62, but we have a resistance line at $3.83. We went ahead and we broke through it temporarily, I believe, and then now we're going down. We hit the support line, and now we're going to try to retest this. And if we don't, and if we fall back down, which I don't really believe we will, these are the support lines here, okay? Let's continue on to the hour chart. And this is our AI that pretty much is able to do a forward prediction of support and resistance. So as you can see here, we have a support line here at $3.19. And we're slowly ascending up in this beautiful channel here. So we could be going like this. And we do have a resistance line at $4.18. If we do break this, then guess what? We're looking pretty good. We may get something like this where we can get a cup and handle, and then the stock might start to explode. Okay? Let's go in and look at the day here. Same story. We got a resistance line here at around the $3.80-ish, 74-ish position. Once we break, we're looking at $5.30 off of the day chart. And here are the other ones as well here, okay? And again, if you had this back then, you would be able to predict these drops, and you'll be able to see once things broke, you're able to understand where things are going, and we can see we've been bottoming here in that direction. So let's go in. Let's go ahead and take a look at the week here. And again, $4.19 would be the next level of resistance. And then we have 747, 1204, 15. And we could, again, get something like this, get a nice cup and handle. All right? All right, so that's what I have to say there. And let's just go ahead and take a look at our flow algo. Like I said today, in terms of our algo flow, we were definitely bullish because we started in changing up in the upper direction. So now it seems that the algo score is going down, right? And again, these are multiple different indicators. Option traders may change, but again, the market direction is changing, and maybe option traders need to catch up with the fundamentals. But again, keep this in mind. This is a very important graph here, and it's pretty predictive. So there's that. Now I'm going to finish it off with a Monte Carlo projection here to see what could be the range for Clover. So it seems that in terms of this, it seems that we may be consolidating. There is some consolidation happening in the direction of the stocks. Could go anywhere between the $2.80-ish to $3.40, and we know there's some support lines and resistance lines, and they could bounce off of that. But it seems to me that we are consolidating, which means the AI is recognizing that we may be in for a nice reversal. So overall, we could go in and get more, and we can just answer this question live here. So the interpretation of the algo flow chart. So what the algo flow does, just a quick question here to help out our comrade here. Normally, if you want to get access to this data, it's you can go to Flow Algo, and they normally would charge an immense amount, which is unbelievable. But it just cares to show you how expensive the market knowledge is. $149 for monthly, but if you want to pay for the yearly, it would be $149 a month. So it's extremely expensive, right? So what the algo flow does is it tracks smart money, right? You have these option chains, right? And there's just so much going on with this option chain, so much data, a lot of mess. And what this does is it graphs it in a way that allows you to understand where option traders are wanting to take the stock. Where are they bullish? Are they bearish? So now we're starting to see that option traders are maybe starting to get a little bearish on the stock because, hey, it's been increasing a lot, right? And again, this is not the Bible. It's not like if it goes down, it goes down. But again, it's all probability, right? And if you have a stock price going up and an algo going down, well, that to me looks like a bearish divergence, meaning that the stock price is going up and the algo is going down. Now, if you have the algo score going up and the stock price going up, well, that's a bullish convergence. Vice versa will be a bullish divergence when the algo score is going up, but the stock price is going down. Okay? So that's how you read these, and it basically helps you take all of this crazy data, puts it in a nice graph, and projects it out for you. Okay? So that's pretty much where we're at. And again, if it's below zero, you'll see the color change. It'll be red. Now, if it's above zero, it'll be green. It'll be a nice little, you'll see a nice little line here. Beautiful, sexy line. It'll be green. Okay? So there's that. So overall, I hope this was helpful. There's more things to discuss with our AI, but there's just a lot going on, and I don't want to make this video too long. I would love to have you. Tomorrow would be a great day to join our Patreon. It'll be a link down below, And don't forget to join our Webull, as that is going to expire with their 5 free stocks they normally do too. So please check that out. Let's go here. And once we go in here, just understand that if you guys want the difference between this, I got a lot of questions between what's the difference between this package and this package. Everything that you saw is included in our basic AI, right? This has it's not basic, it has a lot, right? The only difference between the Pro is that it's limited. And the reason why is you get your own channel where you have the privacy to do your own AI, and also you get a group monthly Zoom call where we can go ahead and analyze stock analysis, do an intrinsic value calculation, free cash flow, and project out stocks that essentially you want to project out. It's $49.99 now, but we are going to be increasing it to $99 in the next couple of months. So whoever is already enrolled in this, you guys are going to be grandfathered in. And that's my way of thanking you for supporting our mission here at Al Stock Trades. Overall, please, 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 don't forget to get your free stocks, okay? You only got to do is deposit a penny, use the link down below. And that's all I have for you guys today. I'll see you guys in the next one.